Good morning, everyone. Welcome to this special edition of Business Morning. Yes, it's a holiday, but we still do business. 55 minutes of current and relevant business conversation. That's what we do here in Business Morning. Happy holidays, especially to our Christian viewers right there as you celebrate the Easter, whichever way or definition you give to it. It's a holiday for everyone. That's the good thing. And unfortunately, we start the program on that accident, a multiple accident that happened at Kara Bridge this Good Friday. Multiple cars, a lot of cars involved. But one good news that has come from this is, in spite of the number of cars involved, there's been no death reported. Those injured have been taken to the hospital. Children were in some of those cars, smashed from different parts. Commercial, private cars, the trucks, they're all there from different. But one thing we can be grateful to God for protection is there was no life. For now, no life has been lost. Yes, you see the picture there. Even that red car that you're looking at I think that had a woman driving with 3 children, but none of them were injured. All of them, or most of them, are at the scene right there watching this. Some of them have been taken to the hospital, those who are injured, but no death has been recorded, and we do pray that it remains that way. What a story for Good Friday. Well, another thing is, for our DSTV viewers, we'll be leading you to Abuja, now the Federal Capital Territory, as the Minister Nyesom Wike has a briefing, has a message for you at a special briefing. That's for our DSTV viewers. On our other platforms, we continue right here on Business Morning. If you're watching on YouTube, just switch to the next window and you stay here with us. Now let's do business. Starting from the global space, oil prices extended gains on Thursday on the prospect of tighter supply after Washington imposed further sanctions to curb Iranian oil trade, and as some OPEC producers are pledging further output cuts to compensate for pumping above agreed quota. So for this morning, big rise is what we see for Brent, more than 3%. It's steadily going up from 64, 65. This morning we see it at 67, heading to 68, hopefully. $67.85 after gaining more than 3%. WTI also up about the same percent, now at $64.45 a barrel. For both benchmarks, they settled 2% higher today than their highest level since April, and on track for the first weekly rise in 3 on Thursday. Remember, of course, at the bottom of all of this movement, President Donald Trump's new sanction on Iran. That's wonders. Also, the tariff war, which is going on, especially now between the United States and China, and OPEC, too, International Energy Agency, and several banks, including Goldman Sachs and JP Morgan. They've cut oil forecast demand and price for the year 2025. Now we come to Nigeria, where the Central Bank of Nigeria says it will begin mystery shopping, is what they call it, mystery shopping exercises across bureau de change outlets in the country to strengthen compliance with anti-money laundering and counter-terrorism financing regulations. In a document signed by the Director of Compliance Department of the CBN, Ammonia Okusunju, the CBN said that the exercise, which commences with immediate effect, will involve deploying undercover compliance officers to assess how well the BDCs are implementing key regulatory requirements such as customer identification, know your customer procedures, and reporting of suspicious transactions. The financial market regulator said the move is part of its enhanced oversight of illicit financial flows in the country. The Apex Bank also is warning that any operator found to be in breach of any anti-money laundering and counter-terrorism financing frameworks will face sanctions, including monetary penalties and possible revocation of licenses. The Securities and Exchange Commission says it will collaborate with law enforcement agencies to take appropriate enforcement action against fraudulent cryptocurrency investment scheme known as One of them we've seen, of course, heard about is CBEX, its affiliates, and as well as the promoters. The SEC's statement comes in response to recent media reports on the activities of the crypto bridge exchange, CBEX, which reportedly also operates under the corporate identity of ST Technologies International Limited, Smart Treasury Super Technology. The capital market regulator clarified that neither CBEX nor its affiliates were granted registration by the Commission at any time to operate as a digital assets exchange, solicit investments from the public, or perform any other function within the Nigerian capital markets. CBEX, which is a cryptocurrency exchange that claimed to have obtained a legal trading license in the United States, is reported to have wiped off 1.3 trillion naira, that's about $822 million of investors' fund in 9 months through a Ponzi scheme. And the global trade tension remains a source of concern for many, including the Lagos Chamber of Commerce and Industry. At its quarterly press briefing, the meeting elaborated the impact of the change in international trade landscape and how it will affect Nigeria's imports and exports. The president, Mr. Gabriel Dahosa, is asking members to rethink and re-strategize for new trading partners. It's the quarterly press briefing of the LCCI, and the most pressing global trade tension is on the mind of every member here. The executive says they've been following conversations since the United States imposed at least 10% on imports from other countries into their country, and Nigeria has a 14% tariff.
What is more important and where Nigeria is more impacted is the effect of the tariff on countries that we have very high volume of business with. And that's number one, China, our biggest foreign partner, and India. So the effect on those two countries are what will affect us. And some of the effect is positive because also, as you probably referred to and we have been seeing, China is now paying a lot more attention to other countries where there is room for growth of their exports. And one of the biggest suspects, of course, is Nigeria.
Seizing the opportunities may be hampered by infrastructural deficit. The Director General of the Chamber fears this will be accentuated by the squeeze on government revenue.
That infrastructure or capital expenditure is at risk because of the way the budget is structured. And we need to have infrastructure to support all the sectors to do well. So that's one area where we need to try and attract foreign direct investment, but also pay particular attention between collaboration between the private sector and the public sector to get infrastructure right for the economy to begin to do well.
LCCI is also asking for reduction of interest rate at a time like this to give incentives to investors in the real sector to contribute more to non-oil exports. So that's it, getting a resilient or building a resilient economy and infrastructural sector to be able to withstand the shocks of the tariffs and even take advantage of it. One of what may be used is the credit system in Nigeria. So this morning, let's find out how strong or weak our credit infrastructure is. And we're having the conversation with Mr. Tunde Popola. He's the chairman of Credit Bureau Association, joins us from here in Lagos. Mr. Popola, good morning, and thank you so much for joining us on the program.
Good morning. Thank you for having me this morning.
Yeah, I know it's been a while since we had you on the program, but the credit system in Nigeria seems to be getting a lot of attention. I've had some conversations about buy now, pay later, and all of these are supposed to be built on the credit infrastructure of Nigeria. But how would you rate our credit system in the last, let's say, 2 years, since the story started, at least, in the limelight? How strong or weak are we in that area?
Thank you very much. I think Nigeria has done very well in the last 2 to 3 years. we have significant improvement in access to credit in the last 2 to 3 years. If you recall, the credit infrastructure was very, very weak before the introduction of credit bureau into the Nigeria space in 2009. And even as of 2019, credit bureau coverage, which is like the total number of Nigerians who adult population who have access to credit and they have their information in the credit bureau, was very low at about 8% as of 2019. But as of 2025, where we are today, that figure has moved to 40%, in which case about 50 million Nigerians have been captured and businesses have been captured in the credit bureau database. And that speaks to significant rise in the number of consumers and businesses that have access to credit over the last few years. You also realize that credit, the private sector has also moved significantly. In fact, as of February this year, credit to private sector was about 75 trillion naira. That was significant. In just like July 2023, that figure was just about 56 trillion. So in the space of 1.5 years, we've seen that significant rise in mobilization of credit by the lenders from 56 trillion to 75 trillion over 1.5 years. That is a significant rise. Today, I'm very happy to also report that the issue of access to credit is gaining significant momentum. We have so many lenders in this space now. Apart from commercial banks that we know have traditional role of financial intermediation, which is to mobilize deposits and make their credit available to Nigerians. We also now have a lot of micro lenders, a lot of fintechs who are now in this space, giving a lot of access to Nigerians to have access to what we call consumer credit. So that is the situation we have today. That situation was highly influenced by the fact that the lending institutions now have reliable credit infrastructure, which is the credit bureau, where they can fetch information. And the credit infrastructure, the credit bureaus have also been up to their, living up to expectation by making sure that they have developed an array of products and services that can, stimulate lenders to be very confident to be able to have information they need to lend. They need to be able to source for credible people and businesses to give money to. The bureaus are available to do that, to help them to do that. They need to be able to provide applications that come for credit, and the bureaus are there with products to help them to do that. They also need to be able to monitor services, loans that they have granted. The credit bureaus are also there to help them. Even when they now have delinquencies or default, the credit bureau have products and services they have developed to be able to help them to access, to help them manage default and delinquencies. In the last few years, because of the enhancement in the IB infrastructure also, which is about the NIN and the BVN, these two means of identification have also helped to get as many people as possible to have unique identification. This is the issue we've been talking about for years, and I'm happy that now we are there. I also must also commend the government for all the initiatives that they have brought to bear on access to credit for Nigerians. Now we have the credit to students, which is through the Nigerian Loan Fund. We have the Credit Corps, the Consumer Credit Corporation. We have a lot of intervention, initiatives on access to credit by the Bank of Industry, by SMEDAN, and by the central bank directly. So all of these playing together have helped us to begin to see that significant rise we are seeing in the number of businesses and the number of people who have access to credit, as well as in the volume and quantum of credit that we now see in the economy.
Yeah, interesting, and I'm so glad that you gave those numbers, Mr. Popola. But we still hear stories of, the mindset concerning this. We know there are some parts of the country, I don't know if it's religious or just a tribe thing, but some people are averse to credits. They don't want to owe debt and all of that. I wonder if that has changed or we're still working on changing it.
Okay, so ordinarily Nigerians, a lot of Nigerians don't like to go into credit. They look at credit issue with some level of negativity. But I believe that is changing now. And the way why I said it's changing is also because of the influx of applications that we have seen that goes to lenders from Nigerians. Remember I told you now we have almost 50 million Nigerians on the database of Credit Bureau, which means that all these 50 million people have enjoyed one credit or the other. And this was significant if you look at it from where we were coming from 4 or 5 years ago. So, and I guess it also has to do with the awareness creation that a lot of these lenders are giving. It also has to do with, the ease with which people can now access credit. Now, because of varieties of applications or what you call apps, people can, on their phone, on their laptop, just have access to their account, and then they can initiate, processing of loan or application for loans, and within few minutes, at most hours, they can have a feedback whether that is granted or not. So I guess the enhancement in the environment, in the infrastructural environment that makes it easy for people and for borrowers generally is also helping the situation that we have on ground. I must also say that banks, the drivers, fintech micro lenders are very ingenious in product development. And I think they have led the pack of lenders when we are talking about access to credit for consumers in particular in Nigeria. So the applications they are brought to bear, the infrastructure they've brought to support, the kind of data that they have been able to mine to be able to provide the customers and make it easy for them is helping the situation. There's a lot to be done. There's still a lot to be done in that regard. But today, I think we have moved, and the awareness is catching up, and a lot of people no longer fear, going into credit.
So talking about the packages and accessibility, I do know that buy now, pay later is available for devices, for cars, and all of that. But, sometimes it does seem even that initial payment could also be difficult. I know it's also a way of ensuring or protecting businesses. Do we have enough? When you talk, I know you said that they're ingenious in putting together these packages, but do we have enough that's accessible to an average Nigerian?
Okay, very good question there. I think I want to see more. Where we are today, quite a lot of these loans go to small ticket transactions. A lot of these transactions have to do with just meeting immediate, funding needs. So people want to borrow 20,000, 50,000, 100,000. These are the crop of the high number of applications that we see. But where it comes to the core consumer loans, of access to loan for mortgage, for properties, for vehicle acquisition, and enhancing business, expanding and growing businesses. There's still a lot to be done there, and the reason is very simple. The average income for Nigeria is still very low. Today, if you want to buy a new vehicle, you know how much it is. Let's say you want to buy a Toyota Corolla, maybe you need about 40 or 50 million. And you have to pay this loan over 4 or 5 years. So that average monthly contribution may still be very high for a lot of people. And I think it's the same thing when it comes to mortgage loans as well. And of course, when you add the issue around interest rates, which is high on account of the environmental issues on inflation and cost of funds, you realize that there's still a lot to be done. And for me, these are the limiting factors that we are seeing. We need to be able to move this new tempo we are seeing from people just borrowing for consumer and for consumption to be able to own assets, to be able to stimulate their small businesses, and so on and so forth. That's where I think we need to do a lot of work. And all of us, the government and the lenders, have a lot to do in this regard.
What do you think they can do? Because it sounds like things are expensive, and even these people who want to give this credit are also doing business. So, what can be done? What do you think can be done to soften these very difficult parts?
Okay, so the government is trying to do some level of making special fund available with lower, package or moderated cost of fund interest rate, maybe single digit interest rate, for instance. So a major issue has to do with cost of funds. So where we have incentives to drive down the cost of fund, the price of loans, it will help a lot of businesses and a lot of consumers to be able to want to do that. Now, the other issue is to see how we can expand the tenor of the credit facility, of the facilities. I give you an example of vehicles. So if somebody normally leasing of vehicles or acquisition of vehicle on through credits, repayment is meant to be around 4 or 5 years. So maybe they need to really repackage product along the line, to make it longer. We know the vehicle can last longer as longer than 4 or 5 years if it's well maintained. So we have to look in that direction. As long as we cannot bring down the cost of the vehicle because of the devaluation of the currency and all the associated issues, what we can do is to see how we can make it a bit comfortable for those borrowers to repay over a period of time. The other thing is to find a way to enhance income of Nigerians. And I think government has done something in that regard. So it all speaks to how much do you earn and how much do you need to repay loans. As long as what you are earning is low, it becomes difficult for you to be able to really do much. But if you have a way to enhance the income of Nigerians, and there's a way we can come up to spread, enhance the tenor, extend the tenor of paying the loans, I think it will help to stimulate much more access to credit. It will encourage much more people to really want to go into it.
All right, sounds like it's something that should be done for almost everybody, but thank you so much for your time this morning. Managing Director and Chief Executive Officer of CRC Credit Bureau Limited, Mr. Tunde Popola. Thank you.
Thank you so much for having me this morning.
All right, now the other issue, of course, is the CBEX. EFCC has promised that they will help the victims to recover their funds. SEC has promised that they will also pursue, those who are behind this scheme and deal with it. So we will delve into that, but let's take a break first, and when we come back, we'll have that conversation here on Business Morning. Please stay with us. Welcome back to watching Business Morning here on Channels Television. And yes, we are delving into that Ponzi scheme that has seen a lot of Nigerians. I heard there's more of Nigerians and Kenyans shedding tears. At the time, they should be celebrating Easter. I wonder if it's an intentional strategy that we see some of these Ponzi schemes bust when it's a holiday or festive season. But now let's discuss this with Professor Uche Walike, Director, Institute of Capital Market Studies at Nasarawa State University. Prof, good morning. Happy Easter, happy holiday to you. Which one works for you?
Thank you very much. Any compliments of the season?
Yes. So, I wonder if this Ponzi scheme, they always target festive period. We're in Easter now. Perhaps a lot of people would have been planning and investing and hoping that, they'll have a bountiful Easter celebration. But of course, this is what they face, those who are involved in CBEX.
Yeah, it shouldn't come as a surprise. Not necessarily festive season, but usually when the economy is experiencing, one challenge or the other. You notice we had MMM, was in 2016, and 2016, Nigeria's economy was in a recession. We also had MBA Forex. MBA Forex was around 2020. Recall in 2020, again the economy was in a recession. That was in the heat of the global of the COVID, and now the CBEX. These have been the major recent number I saw. I showed that we've had over 30 of them Ponzi schemes in place. So yes, festive seasons for understandable reasons. People will want to have more money, and so they fall victims to such schemes.
So that means when there's a downturn in the economy, individuals generally have to be more careful and intentional, before putting their money somewhere. But I guess it's also the responsibility to investigate where you want to put your hard-earned money.
Absolutely, Ini. You see, that is one thing we the public need to understand, that where you have an economy where, for example, the average return on investment is not more than 20% per annum, okay, and you now find an investment that is promising you 30% every month, 40% every month. Of course, you should that should raise your antenna. Okay, if you look at, even if you take 30% per annum, that translates to 2.5%, in a month. Okay, assuming you even have any such investment, and of course, I can't think of any, right now. So when you now have one that is saying you get 30% on a monthly basis, or more than that, that should make you cautious as a rational investor. So it all boils down to the lack of investor education, lack of, you can also say, not necessarily financial literacy, but investor education is what is critical here. That people should understand this, because if you understand the risk associated with investing in such schemes, of course you wouldn't do that. In investment, generally, we talk about relationship between risk and return. Any investment that has is promising you very high return also has very high risk. So the higher the risk or the higher the return, the higher the risk, and that's why people should also ask questions. You have a promoter of an investment coming to you to say, put your money, you get this huge return in 1 month. The first question to even ask is who are you? Okay, are you registered? Every investment is meant to be registered. Every promoter is meant to be registered. Are you registered with the regulator? And regulator in this instance is Securities and Exchange Commission. So that should be the first question that every prospective investor, in quotes, should be asking. So once that investment is not registered with the Securities and Exchange Commission, then the person should run away. Okay, and it is also important, as I said earlier on, for the investor to also ask, what is even your source of income? This money you're going to take from me, how are you going to use it? And that is why you find many of them don't have, you can't access their financials. They don't have any financials, to even look at. Their operations are largely, opaque. And in such circumstances, the investor should be very, 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 very wary. So first, you try to find out whether the investor is, the investment is registered, the company is registered. You also try to find out who are the people behind the company, who are the promoters, who are the, the directors of the company. And you also try to find out, as I said, their business model. Okay, and I just told you something. You have this economy, for example, where you can't have returns as much as 30% on a month, and somebody is promising you that. So where is that person going to invest that kind of money? To be able to make enough returns to have something for the business and also pay you the 30% monthly. So what you find that happens is simply the Ponzi arrangement, okay, that has been in place since the days of Charles Ponzi, as far back as 2020, okay, getting money from the new investors and using that to settle the earlier ones. And that's what happened. And that is why most of these schemes rely so much on referrals. They tell you to go and bring, the more people you bring, the more money you make. So that should tell you that there's something wrong with such such an investment.
So, would you say that this, when we look at the level of enlightenment and education in the Nigerian society, would you say perhaps there are ways to simplify this responsibility and obligation of investors or potential investors?
Yes, I think more should be done. I'm aware that the Securities and Exchange Commission in particular and other market regulators, have been, doing, their bits in the area of educating Nigerians. And I'm also aware the SEC in particular has also been issuing warnings, several warnings, against, patronizing these, Ponzi schemes. But of course, you are talking about, over 200 million people here. And that is why I think the messaging this time, has to go real down, deep down to the grassroots. Okay. Massive grassroots campaign, should be involved here. Using, religious leaders, using market associations, okay, and also using the social media, media like what you're doing now. So that's very important. And in recent time, particularly now that most of these Ponzi schemes are being crypto enabled, okay, tech enabled, okay. So it's very important that this messaging should also focus on social media, because look at the recent case we just witnessed. The crypto bullion exchange, the CBEX. They use much of social media to get their victims, if you like, WhatsApp, Instagram, and so on, including celebrities, including influencers. So the campaign that the kind of campaign I would like to see is also the type that also makes use of these influencers, these celebrities, to warn against patronage of Ponzi schemes. And that's also why I think that there should be a way to also have these influencers, registered by the commission. And I'm happy to note that the Investment and Securities Act of 2025, the new act, has also empowered the commission, to be able to do that, to be able to, deal with Ponzi schemes, to be able to also, including getting this, influencers registered, because part of why these Ponzi schemes too have thrived, over time, has also been the issue of, if you like, regulatory gap, vacuum, particularly with respect to, cryptos, the cryptocurrencies. And the good news is that right now, Section 26 of the Investment and Securities Act of 2025 has now made it clear that everything about crypto investments is now under the regulatory purview of the Securities and Exchange Commission. That wasn't the case before now. There was no clarity as to who, which regulator should handle that, and a lot of promoters of these schemes, took advantage of that overlap. All right, but now that has been addressed by this law, and I want to believe that that will go a long way to help to, check the menace of or the proliferation of these Ponzi schemes.
All right, thank you so much, Prof. And yes, of course, we've also heard from the Securities and Exchange Commission. So hopefully we'll see better days in dealing with all of this. Thank you, Professor Uche Waleke, Director, Institute of Capital Market Studies at Nasarawa State University, also the President of Capital Market Academics of Nigeria. Thank you so much, Prof.
My pleasure. Thanks, Amy.
Well, let's go. Do we say a bit soft when we're dealing with money? There's no soft side, yeah? But let's talk about entertainment, particularly theater at this time. Culture I don't know. I think it's coming back, but who am I? I'm not in that space, so I don't really know. But we have the chairman, Duke of Shomolu Foundation, Mr. Joseph Edgar, went through that accident on the road to be here. We really appreciate that. But what did you see out there? Is it cleared now? You're here. It's still thick.
Yeah.
Wow.
Horrendous.
Wow. Well, may God help us. I don't know what to say. But we're talking theater now.
Yeah.
The culture seems to be returning. Is it really catching up?
It didn't go anywhere in the first instance.
Really?
Nah.
But it wasn't the way it was when our parents used to spend their holidays and their times at the theaters.
Yeah. But it's like I said, it didn't go anywhere. It's always been there, but maybe the younger generation just shifted attention somewhere else. But it's always been there.
So what's the level now? What's the...
Okay, so it's ramping up. It's ramping up. Budgets are going higher. Better pay is coming to the system. Better infrastructure. More awareness. We're filling up halls in strategic markets within the country. So it's better, but moving on well.
Yeah, and you know, you talked about the young people, and it does seem if you want to catch the young people now, you have to infuse technology, digital. So even the theater plays and performances would not look the way. I mean, you watch some, especially the Asians, it's a theater play, but they do a lot of lights and a lot of, you know, aesthetics that make it look like you're watching even cartoons sometimes.
Yeah, true.
But that's funding.
So that's funding, yeah? That's funding.
So how is funding to the area?
Tough. It's getting better, but it's still a long way off. Do you understand? And I think the main problem we face in theater is our very unique nature in that because it's live, there's a finite number of seats you can sell at any point in time. So by the time you say, okay, let me scale, that means you're trying to use technology to go digital, and it's no longer theater. Then you're now going to compete with Nollywood and all of that. So because the guys who provide the funds, either are sponsors or investors, you just see that at any point in time, you can only fill up 400 seats. As compared to someone who's doing a concert of 8,000, 10,000, 20,000, 30,000, you know, so that funding goes there, you know. But right now, it's getting better, but it's a long way off.
So does that speak to the facilities? I know the National Theatre is supposed to be your major hub.
Yes.
We have some other privately owned spaces.
Yes.
And I know that sometimes you guys also try to do multiple shows. So you have the 5 o'clock show, then you have maybe the 8 o'clock and all of that. Even though that puts a lot of strain on the actors because they're live there.
It does.
They're in the studio. But does it speak to the issue of facility or infrastructure?
Yes, definitely. But you see, at the end of the day, like you've mentioned National Theatre, I'm very happy that the Bankers Committee has come in, you know, to throw in a lot of funds there. That has been refurbished, you know. Now, the next thing to see if we can fill up that hall. I hear it's about there are different kinds of halls there that sits different ranges of people. So we're yet to see if the market is deep enough to fill up those halls as many days as possible. What's
stopping the market from being
so the market is actually between the 14-year-old to the 55, 60-year-old people. You get who are driven more by movies, by music, by fashion, and so theater is a little bit elitist. You get, so we're trying to democratize it by bringing it down to that horizontal base. You know, like I said, it's a struggle, but we are getting there. You know, so the average person would rather go watch a movie, you get me, than come and see theater. A theater production, or rather go watch a musical concert or a fashion show, you know, than come and see there. Theater is a little bit elitist, even all over the world.
No, but I mean, everything is changing. Even in television, you can't, as a television station, channels, for instance, cannot rely on just the traditional means. You go digital. We talk about our YouTube channels and everything. Shouldn't there be a way to, you know, capture some of this things to expand your market?
Yeah, so for me, I'm very unapologetic about traditional theater. Do you get? So once you take it and put it on screen or any other device, I lose it for you. I mean, that's not theater for me. So in my own production house, you get, I still push that physical engagement, physical interaction between, and that limits funding. Do you get?
So what do you do to get the people to the theater so your market can grow?
Maybe I'm the wrongest person to call to ask this question because I have my market. Do you understand? So I do 8 shows a year.
You're happy with what you have?
I'm happy. I'm going at a very good pace. You get? So I'm doing 8 shows a year. I started with 1
So what are you doing that some others are missing out?
And so I've discovered a niche. History.
You don't want to share it?
I'm sharing it now.
Somebody else will take it?
No, I'm sharing it. History.
Okay.
History. You get? So we do historical stories, historical figures, and then we try to bring those people we are putting on stage, you get into the hall to watch the show. So, for example, we did a show on Obasanjo Aremu, and he was in the hall. Do you get? That's a major pool. So he's sitting there in the hall, he's getting all of that emotions, and then the audience is watching him. They are also watching him in real life. December, we did something on Herbert Wigwe, the late MD of Access Bank, and his children were in the hall. Do you get? We did Emir
I think you have one coming up soon.
Yeah, we have Bianca. And Bianca will most likely be in the hall. Bianca Odumego Juku, a beautiful love story. Do you get? So that has carved a niche for us in the market. And then we fill up the halls. I mean, we do 8 plays every year, 8 major productions every year that we spend hundreds of millions of naira. We are going to Kitty in August with 200 million naira, 53 plays in 38 local government areas.
So you don't have a problem of funding?
Not really. Not really. Because I'm an investment banker, so I understand the language of investment. So when I go to sit down with my prospective supporters, we speak business, we don't speak theater. So I collect the money and bring it back to theater.
I hope you are sharing the knowledge so that the sector itself is thriving and not just you thriving.
The sector is thriving, but not at the pace.
Yeah, that's what I'm saying. If you're doing comfortably well, then the sector should be doing comfortably well. Especially we're talking about theater now.
Yeah, the sector is doing comfortably well. It's doing compared to where it was 10, 15, 20 years ago. You get? So every December now, during the peak periods, there are productions everywhere in most parts of the country, and they're filling
up houses. That's the dirty December.
Yeah,
it's part of the dirty December.
Is, but even though we have a small share of that dirty December, but we're pulling on. It's going to get better.
Yeah. So I hope you're also mentoring others so that you can get fresh blood.
Definitely. We're doing our best. There's resistance, but we're doing our best because we are coming from a different angle that the system is not used to. You get? So we're trying to put funding as the most important factor of production in theater. You get? System resisting that. You get me now? And it's a struggle to let them see that you can get the best story, you can get the best actor, you can get the best costume, the best lights. If there's no funding, it doesn't move. Nothing happens. So the guy who's bringing the funding should come to the forefront. There's major resistance in the system, but we're trying to show them that that's the right way to go by what we're doing.
And you talk to them with the investment language.
Which they don't like.
Which they don't like. Oh. I thought they would like it. I thought they would like it because everybody would want to. I mean, we just talked about CBEX and
there's something they call artistic arrogance. Do you get? And it's positive and negative. It's positive in the sense that thespians, those who are in theater space, retain the very fine tenets of performance acts. You get? They don't get watered down. So, for example, now a Nollywood actor might find it very difficult to go on stage. You get? So anybody can. I'm very sorry to say this with all respect. Anybody can be a Nollywood actor, even you. But anybody can be a theater actor. There's a technique about it. There's a technicality about it. You get me now? So that imbibes in them that artistic arrogance, which is very positive. Give them pride in their art. But when it comes to the area of funding, it's negative because they still want to be in charge.
But you cannot afford to be arrogant when you're asking for funds. So you teach them. I think you've been able to get over it as having the investment banking background.
Yeah.
All right. Thank you so much for your time, Joseph Edgar, Chairman Duke of Shomolu Foundation. And yeah, we wish you the very best as you try to sell that message of investment in the entertainment industry very well.
Thank you.
All right, let's take a break. When we come back, we'll head to the global space and see what's happening. Just stay with us here in Business Morning. Space now with Will Ibong. Will, what's President Trump doing again?
Oh yeah, still targeting China. China is still the baby of his eyes right now.
I don't know if he's baby.
So let's look at what Trump is doing. We see the administration has announced new fees on Chinese-built ships docking at U.S. ports following a trade investigation that found China's shipbuilding practices unfairly hurt American commerce. U.S. Trade Representative Jamieson Greer said the move will reduce Chinese dominance, strengthen supply chains, and boost demand for U.S.-built vessels. Fees will apply once per voyage. The Chinese-owned ships could face fees up to $1 million. Non-Chinese carriers using Chinese-built ships may pay up to $1.5 million per U.S. port call. Now, in Indonesia plans to increase imports from the U.S. by up to $19 billion, including $10 billion in energy products, to address a trade surplus and avoid U.S. tariffs. The move was announced by Indonesia's economic minister, Erlangga Hartarto, in Washington. The plan includes boosting U.S. agricultural imports like wheat and soybeans, as well as capital goods, while simplifying procedures for American companies operating in Indonesia. It's part of broader talks aimed at resolving a potential 32% tariff on Indonesian exports. Negotiations between Indonesia and the U.S. will continue over the next 60 days to finalize the deal. Now, Ukraine says it has signed a preliminary agreement with the United States to jointly develop its natural resources. The memorandum of intent was confirmed by Ukraine's economy minister, Yulia Sviridenko. The deal lays the groundwork for a future economic partnership and a reconstruction investment fund. Sviridenko said both countries expect major benefits, though full details are yet to be revealed. President Trump says a full agreement is expected next week. Now, Japan's inflation rose 3.6% in March, staying above the Bank of Japan's 2% target for the third year in a row. Core inflation stood at 3.2%, while the core rate, excluding food and energy, climbed to 2.9%. The figures come amid U.S.-Japan trade talks, while President Trump has paused a planned 24% tariff for 90 days. Japan still faces 25% duties on autos, steels, and aluminum, raising concerns for its economy. Analysts say high inflation could prompt the BOJ, that's the Bank of Japan, to raise rates, but growth may be too weak. Global financial services company Nomura now expects just one rate hike by 2026, as tariffs could slow GDP and wage growth. Now to Malaysia, the economy grew by 4.4% in the first quarter of 2025, slightly slowing from 5% in the last quarter of 2024. Strong domestic demand and a healthy job market helped buffer the economy against global challenges. March saw a 6.8% rise in exports, with shipments to the U.S. up 50.8% to a record 22.6 billion ringgit. Despite this, U.S. tariffs create ongoing uncertainty for Malaysia's trade. Malaysia's GDP growth forecast remains at 4.5% to 5.5%, with export growth expected at 5.2%. However, global demand uncertainties could impact future growth. Now let's look at Google now. The tech space, a U.S. federal judge has ruled that Google held illegal monopolies in online advertising, dealing another major blow to the tech giant. This comes months after a separate ruling found Google guilty of monopolizing internet search. The decision raises fresh concerns about Google's ads, the Google ad business, as it faces rising competition from AI platforms like ChatGPT and a possible slowdown in ad spending linked to Trump's new tariffs. Alphabet, Google's parent company, reports earnings next week. Its shares fell over 1% on Thursday and are now down 20% this year. Those are the news from the global space, Ini, but what is going to happen to other countries, especially the tech? If Google is being accused of monopoly, it's a tech giant. It has other competition, but how is it, if you say pushing others to the sidelines? I actually want to wonder, how is Google monopolizing this? Because it's just a search engine, and every other platform has a chance to be out there.
When DeepSeek also had its space earlier this year, we saw all of the things it did and all of that. So I guess everybody at a time, of course, we know Google is, and then you have other countries with their technologies also try to, upturn
Yes.
the place and all of that. So I guess it's just one story at a time, or one tech company at a time. NVIDIA had its time. DeepSeek had that period also. So let's discuss Google now. I think that's the story.
Thank you.
All right, we'll see you later in the afternoon. And just before we let you go, happy to say there was a recovery at the NGX at the close of trade yesterday. So we'll have the bull on the floor until Tuesday. That's a long stay for the bull. The market was up 0.37%, went back to 104,000 level. We're still at 65 trillion naira level for the market cap. Mostly red is what we had for activity. The top gainers, Abe Buildings, Nigerian Breweries. We've seen it move this past few trading sessions. ABC Transport came out of nowhere, but of course you got to expect the bankers, they are the ones leading mostly when it comes to top trade. So we had Fidelity and Access, and we had Universal Insurance also join that. So there's no market today. It's a public holiday, Good Friday for most countries in the world, including Nigeria. But we'll still be back at 1 p.m. and we'll have some market news for you at that time. So I'll see you back at 1 p.m. I'm Ini John Mekwa.